Good evening, everyone. I hope you are doing well. Can you please confirm if I'm audible or not? Am I audible to everyone? Please confirm it in the chat box if you can hear me clearly. Fine. So, thank you so much for the confirmation. So, let us begin with the session. And hello, Nilesh, Sujit, Chetan. So, fine. So, let us begin with the session. So, hello, everyone. Welcome to IFSCA Grade A marathon where we are going to do comprehensive coverage of insurance and the pension topics fine in a detailed manner, and we are going to do the multiple coverage of these topics with the help of MCQs, where I will be giving the question on the screen and you have to write the answer in the chat box. And I expect all of you to be interactive as much as possible during the session. Fine. So be with me till the end of the session, and we have brought few MCQs for you. And now let us begin the session. So let us begin with the first question. So the first question is, which health insurance scheme in India aims to achieve universal health coverage? And this question was also asked as a part of IFSCA PYQs. So the first option is Pradhan Mantri Jeevan Jyoti Bima Yojana, then the Suraksha Bima Yojana, then the Pradhan Mantri Jan Arogya Yojana, Swasthya Bima Yojana and Pension Yojana. So please mark your answers, write your answers in the chat box. Yes. So you have 30 seconds. Yes, as all of you are writing, yes. So C is the answer to this question, which is the Pradhan Mantri Ayushman Bharat Pradhan Mantri Jan Arogya Yojana. And we all know that this is a health insurance scheme that aims to provide the universal health coverage. I cannot explain you each and everything regarding this scheme, but this is about the question that was asked in the PYQ. Fine. So now let us move on to the second question. So the second question is from the insurance. So which of the following statement correctly describes a money back policy? Which of the following correctly describes a money back policy? It pays a lump sum amount only upon a maturity or death. It provides periodic payment during the policy term as well as lump sum or maturity or death. It is a type of policy that does not offer any survival benefits. It has no provision for a bonus payment during the policy term. So what is the answer to this question? So basically, a money back policy, it is a type of policy that provides periodic payments at regular intervals during the policy term. Fine. So it provides the policy insurance, and and these payouts that are provided under the money back policy, they are actually known as the survival benefits payouts. Fine. So let me see how many of you have given the correct answer. Yes, as most of you are writing, yes, B is going to be the answer to this question, and this is regarding the money back policy where you get the survival benefits. Survival benefits are there, and in addition to the survival benefits, the lump sum amount is also paid to the policy holder at the time of the maturity. Fine. Now the question number 3, which is regarding the whole life insurance and the term life insurance. So a whole life insurance differs from a term life insurance in that. So mark your answers. So I can see your answers. Yes. So the first option is it provides maturity benefits if the policy holder survives the policy term. Then it covers the policy holder for the entire lifetime regardless of when the death occurs. Then it offers high premiums compared to term life insurance due to restricted coverage, and the last it terminates upon the policy holders reaching a pre-specified age limit. So yes, as most of you are writing, B is the answer to this question, because when we talk about the whole life insurance, it covers the policy holder for their entire life, but when we talk about the term life insurance, it only covers for a specified period. So that is a basic difference between the whole life insurance policy and the term life insurance policy. Now the question number 4. Which of the following best defines a unit linked insurance plan? Which of the following best describes a unit linked insurance plan? So take your time and try to answer this question also. For the question number 4, yes. Yes, so the correct answer is going to be the B one. Fine. So what happens in case of unit insurance, unit linked insurance plan is that basically it provides the benefit of the combination of both insurance policy and also the investment. Fine. So you can take the insurance policy, and a certain amount of the premium that you have paid, you can use it for the investment. Investment, for example, in the stocks, in the bonds, and also in kind of hybrid assets also. For example, the combination of stock and bonds. You can choose whatever investments you want to do, and the investment will be done in different kind of such financial assets. So this is the benefit, or I would say the advantage of this unit linked insurance plan. Fine. So I hope it is clear to you. So the correct option is the B one, as most of you are saying. The next is the question number 5. So which of the following correctly defines a deferred annuity? Which of the following correctly defines a deferred annuity? Take your time and try to answer this question. Which of the following correctly defines a deferred annuity? Now basically there are two type of annuities. The first one is the immediate annuity, and the second one is a deferred annuity. When we talk about the immediate annuity, they basically begin making payments right away. Whenever you make the payments, after that you will start receiving the benefits with respect to the pension plan as a part of the immediate annuity. But when we talk about deferred annuity, basically deferred annuity is a contract with an insurance company that promises to pay the owner a regular income or a lump sum at a future date. Fine. So let us say you are contributing to a certain type of pension plan in the different form of installments. So once your installments are done, let us say after 15 years, then after 15 years you are going to receive the benefit. But in case of immediate annuity, what happens? Let us say you have just got retired and now you have a lump sum amount. So you can deposit this lump sum amount as a part of this pension plan, and right away you will start receiving the benefit of that. So that is the difference between the deferred annuity and this immediate annuity. So the correct answer is going to be what? The correct answer is going to be the B part, where the payment starts at a future date defined as the vesting age. Fine. So when you get retired and you have contributed for a certain number of specified number of years, after that you start the receiving under this deferred annuity. I hope it is clear to everyone. So B is going to be the answer to this question. Next is the question number 6. Which principle of insurance requires both the insured and the insurer to act with the complete honesty and disclose all material facts? So very simple question. If you have read these principles, then you can easily answer this question. Question number 6. So mark your answers, please. So let me see your answers. Yes, yes. So question number 3, few of you have had given the wrong answers also. So पीयूष is saying सर क्लास कितने आवर्स की होने वाली है? पीयूष आवर्स वाला तो कुछ नहीं है इसमें, बट questions है, I think there are 65 questions, around 65 to 70 questions are there. So we are going to solve all these questions. So जितने टाइम में हो जाएगा उतने hours की क्लास होगी. Fine. So some of you are writing C as the answer to the question number 6. Few of you are writing B also. Okay, that is for question 5. So yes, C is the answer to this question, which is the principle of utmost good faith, which requires both the parties to disclose all the material facts truthfully to each other, to stay honest to each other. For example, let us say you have gone for an insurance policy, and let us say, not you, but let us say there is this person X. Now this person X is a smoker. This person has some kind of diabetes also, but when he is taking the insurance policy, let us say he is going for a health insurance plan. When he is going for this health insurance plan, he is not disclosing this health insurance company, he is not disclosing to the insurer that he is a smoker, he is a diabetes, because he has this fear factor that if he will tell this insurance company that I have this smoking habit, I'm a diabetic person, then insurance company, what it will do, it is going to increase the insurance premium. So this is the fear that is there in the mind. So what he is going to do? He is going to lie to the insurance company, which is something which is against the utmost good faith, because if at a certain point of time, in the future, if the insurance company comes to know that this person was lying, this person was diabetic, this person has been a smoker, but this fact was hidden from us, so what he is going to do, if unfortunately this person falls in some some kind of medical trouble, then if he will go for the claim of this health insurance, the insurance company has all rights to deny the compensation or to deny the claim as a part of this health insurance, which is something that is promoted under the essence of principle of utmost good faith. I hope it is clear to everyone. So the answer is going to be the C one. Fine. So I hope it is clear to you. Now the question number 7. Which of the following terms refers to the ratio of insurance premium to to the total population? Very easy question. I want all of you to write the answer. Straightforward question. So let me see your answers. Actually, I have to open my mobile phone in order to see your answers because I'm using a small studio. So just give me a second. Yes. For the question number 7, Mr. Qwerty is writing B. Avinash is writing B, Nilesh is writing A, Piyush is writing A. So the confusion is between A and B. So I can understand because both these terms are very much related to each other. But I want you to give the answer. Fine. Whatever you think is the answer, please cite it. Yes. So as most of you are writing, so basically the answer to this question is going to be the B1. Fine. So basically it is the ratio of insurance premium as a part of the total population. So basically if you are able to calculate the insurance density, you get an idea that on an average what is the contribution of the population in the insurance sector through the insurance premium. Whereas those of you who are giving the answer number A, which is the option A, so let me tell you that insurance penetration is not with respect to the total population. It is with respect to what? Anybody in the chat box? Insurance penetration is related to what? So the insurance density is with respect to the population. But what about insurance penetration? If please write in the chat box, it is in context to what? Anyone? Yes, the GDP. So it is directly connected to GDP. So that is the difference between the insurance penetration and insurance density. Density is with respect to the average population, and whereas the insurance penetration signifies that what is the overall insurance premium in a country is contributing as a part of the GDP. That is what we see as a part of insurance penetration. Fine. I hope it is clear to everyone. So the answer is going to be the B option. Now let us move on to the question number 9. Which of the following is not a feature of an insurance contract? Yes, Sujit, with respect to GDP. So which of the following is not a feature of an insurance contract? So the question number 9. Which of the following is not a feature of insurance contract? Payment is made only on the occurrence of a loss. Sorry, not a feature. Fine. So payment is made only on the occurrence of loss. The insured can, who is the insured? So there are basically two entities. The first is the insurer, and the second is the insured. Who is the insurer? Insurer is basically the insurance company. Fine. Who is the insured? Insured is basically the policy holder, people like me and you who avail this insurance facility. So it is talking about the insured. The insured can transfer the policy to another person without permission. Then it involves a lawful consideration, and lastly it is a contract between two parties, the insured and the insurers. I have explained you the meaning of both these terms, the insured and the insurer. Fine. So what is going to be the answer of question number 9? Let me see your answers. Yes. Yes. So very rightfully B is going to be the answer to this question, because what happens in this case is that insurance, but if you have taken an insurance policy, you can, for the first thing is that you cannot transfer the insurance policy to someone else. Fine, that is the first restriction. Even if you are able to transfer, fine, you cannot do it at any cost without the permission. You have to keep the principle of utmost good faith. You have to maintain the honesty, transparency, all such kind of things with the insurer company. Fine. So you cannot do that. You cannot transfer the insurance policy to another person. That is why the question is asking about which of the following is not a feature of insurance contract, and the B is going to be the answer to this question. Fine. Now let us move on to the question number 10. Which of the following correctly defines the principle of subrogation? Which of the following correctly defines the principle of subrogation? The insured is required to bear the part of the loss. The insurer steps into the shoes of the insured after compensating for the loss. The insured must disclose all facts truthfully. The insurance policy can be transferred without the insurer's consent. So what is going to be the answer to this question? Mark your answers. Take your time, read the question, mark your answers. Yes, yes, all of you have given the correct answer. All of you have given the very precise answer. So basically the all right correct answer to this question is basically the option number B. Fine. So this is what the principle of subrogation is, where that allows the insurer to take over the rights of the insured to recover from the third parties after compensating for the loss. So what can be the example of that? Let us say you have taken a motor vehicle insurance. Fine, you have taken a motor vehicle insurance, and let us say you now I will not take your example. Let us say there is a person X who has taken a motor vehicle insurance. Now let us say this person meets with an accident. Fine. Now this insurance company has all rights. Let us say this person met with an accident with another entity. Fine, with a person Y. Now this person has now if this person under a motor vehicle insurance has taken the third party insurance, third party liability insurance, what is going to happen? Insurance company is going to pay the claim amount for, pay for the compensation of this person Y with whom the person X met with an accident. This is an example of principle of subrogation that allows the insurer to take over the rights of the insured to recover from the third party. Fine, after compensating for the loss. Next is very factual question. Question number 11. In which year was the life insurance company of Life Insurance Corporation of India established? So in which year was the LIC established? Very factual question, very factual information. So mark your answers if you know it. Yes, B is going to be the answer to this question, which is the year 1956. Fine. So when in the 1956, when the insurance sector was nationalized, at that time the LIC was formed by the government. Fine. In order to control this whole, in order to it acted as the government life insurance corporation. Fine. So for the life insurance policies, we have this government entity which is the Life Insurance Corporation of India that was established when this whole insurance sector was nationalized in the year 1956. Fine. Now let us move on to the next question, which is the question number 12. Which of the following principle is applied when an insured has taken multiple insurance policies for the same subject matter? When he has taken multiple insurance policies for the same subject matter. So Nilesh was saying something regarding multiple policies. Yes. So B is going to be the answer to this question. For example, let us say there is a person X. Fine. Now let us say this person has taken the insurance from company A. Fine. For let us say it can be any company, insurance company A, for example, ICICI. Fine. It has also taken the insurance from Max Life. Fine. So he has taken the insurance from ICI also and from the Max also. The thing is that if something happens tomorrow, let us say something happens with respect to his health, he has taken the health insurance from both of them. Let us say something happens to his health tomorrow. Now, can he take the compensation amount from both of them? The answer is no. Fine. So that is something what the principle of contribution promotes. Fine. I hope it is clear to you. When a certain person, when a certain entity has taken the insurance from the multiple policies, then what happens as per principle of contribution? The principle of contribution, it ensures that each insurance policy pays its proportionate share of the loss. Fine. If the policies cover the same subject matter. Fine. So it is going to be distributed in the proportional amount by dividing it between both the insurance companies. So I hope it is clear to you. Now the question number 13. Which principle is violated if a person takes a policy on their own life and then fakes their death to claim the benefit? Now, what is the principle that is going to get violated? This is something that we have already discussed. So this is just an application of this principle. Earlier we discussed what this principle is all about. This is the application part. So the question number 13. Nilesh is saying A. Others are saying C. What about rest of you? Please mark your answers. Yes. So all of you, most of you except Nilesh are saying C as the option to this question. So yes, C is the answer to this question, which is the utmost good faith. As I told you that under the utmost good faith, what does it emphasize upon? It says that person has to maintain the honesty, person has to maintain the transparency with respect to all its actions as under the consideration of the insurance policy. So you have to be 100% transparent. I gave you the example of smoker, the diabetic patient. So that is something that falls under the principle of utmost good faith, and this is something the answer to this question, which is the option number C. Now the question number 14. Which of the following best defines the insurance penetration? Now in the last question we talked about the insurance density. This time we have insurance penetration, and I have already explained you that. So I'm expecting the right answer from all of you. Fine. For the question number 14, mark your answers. Yes, very easy. Just now I told you what is insurance penetration. So yes, the percentage of insurance premium to the GDP. Now let us move on to the question number 15. Which of the following correctly distinguishes between peril and risk in an insurance context? Which of the following correctly distinguishes between peril and risk in an insurance context? So mark your answers for the question number 15. So few of you are writing B, others are writing A, rest of you are writing C. So B, A, C, three type of answers we are getting. Most of you are writing either B or C. Fine. So the correct answer to this question is going to be the C one. Fine. So peril is nothing. Peril is basically the cause of a certain type of damage. What is risk? Risk is basically the possibility of a certain kind of damage. Fine. So peril is the cause, risk is the possibility. For example, peril can be the fire, peril can be the theft, different kind of perils can be there. Fine. Where a risk, what is risk? The outcome of this peril, the possibility that a damage when happen when the peril occurs. For example, if the fire happens, fine, this is a kind of peril. Now there is a risk that if the fire will happen, somebody's house might catch fire, the house might get burnt. So what is this? This is a possibility, that is a risk. So C is going to be the answer to this question, not the A one. Fine. I hope it is clear to everyone. Now the question number 16. Which type of risk is associated with the unpredictable changes in the economy and affects a larger number of individuals? Which type of risk is associated with the unpredictable changes in the economy and affects a larger number of individuals? A large number of individuals. Fine. So for example, the static, dynamic, pure and particular risk. So what type of risk it is that affects a large number of people? Yes. So basically it is straight away it is the definition of the dynamic risk. Fine. Very much easy to answer. Now the question number 17. Which of the following is an example of a hazard in an insurance context? Which of the following is an example of hazard in the insurance context? So what is the answer? Please mark your answers for the question number 17. Some of you are writing A, C, D, three type of answers we are getting. So the first option is a house fire destroying property. The second is risk of earthquake in a highly seismic zone. Third is the potential for flood damage to a house near a river. Then the next is unlocked door in a high crime area. So basically there are four type of options and the correct answer. So basically what the hazard is, firstly what is the hazard? Hazard is something that increases the likelihood of loss. So what is risk? Risk is basically the possibility of loss. Now hazard is something that intensifies this possibility, that increases the chances of that risk converting into a reality. So it is a journey between the risk to reality. It will increase the likelihood of the risk getting converted into reality. It increases the likelihood of the loss or the damage. So the correct answer to this question is going to be what? It is going to be basically the D option. Fine. So unlocked door in a high crime area. Fine. So high crime area is a type of area where crime is very much prevalent. The risk of crime is high. So crime is what? Increase in crime is what? It leads to a certain kind of risk. For example, a theft. It is a certain type of crime. Now in that high crime zone area, suppose there is a house whose doors are opened. Now if the doors are open, what does it mean? It is inviting the risk. It is increasing the chances of converting that risk into a reality. So what does it mean? It is a type of hazard. So this is the D option. That is the answer to this question. Fine. Now let us move on to the next question, which is the question 18. Which of the following describes the relationship between risk and premium in an insurance contract? C and B. Two type of answers we are getting. C and B. So mark your answers. So basically the thing is that when we talk about the relationship between the risk and the premium, so basically the risk is directly proportional to the premium. If the risk is high, then the premium is going to be high. If the risk is low, the premium is going to be low. So if we see all these options, as the probability of risk increases, the premium decreases. This is what the inverse relation. The higher the risk, the lower the premium. This is what the inverse relation. But what I said, there is a direct relationship, not the inverse relationship between the risk and premium. So if you read the C option, then as the probability of risk occurrence decreases, the premium also charge decreases. So of course, if the risk is high, the premium is high. If the risk is low, the premium is going to be low, which is what stated as a part of this option C. So C is going to be the answer to this question. Fine, for the question number 18th. Now let us move on to the next question, which is question number 19. Which of the following is an example of speculative risk that might result in both financial gain and financial loss? Which of the following is an example of a speculative risk that might result in both financial gain and financial loss? So yes, for the question number 19th, mark your answers. So when we talk about the speculative risk basically they involve both the possibility of loss and gain. Fine. So if you read both these options, I mean all these options, so the most correct option is basically the option number B, which is basically the stock market. If you invest in the share, then the share prices might get bullish or they might get bearish. So it has probability of getting both, providing or resulting in the gain or the loss. Fine. So that is what the speculative risk indicates, and the B is going to be the answer to this question. Fine. Now the question number 20. What is the primary function of a TPA or a third party administrator in the health insurance sector? What is the primary function of a TPA in the health insurance sector? Question number 20. So if I see your answers, so for the question number 20, okay, B and C, two type of answers we are getting. What about others? Please mark your answers. All of you, please mark your answers. Yes, yes. So basically, in the question number 20, the correct answer is going to be, what is going to be the correct answer? The correct answer is going to be, so basically when we talk about TPAs, so TPAs are nothing but they are the insurance intermediaries. Fine, they act as the insurance intermediaries. So for example, if you have a certain type of hospital policy, not you, but let us say there is a person X who has a certain type of insurance policy and he met with an accident, and now this person is admitted into an hospital. Fine, now if you want to avail the benefit of this insurance policy in the hospital, then what he can do, he will tell the hospital authorities that I have an insurance policy from XYZ company. So what these hospital authorities are going to do, they are going to get connected to a TPA. TPA is going to act as an intermediator between this hospital and the insurance company, so that the burden of the insurance company gets reduced, and this TPA is going to help the insurance company in order to, in order to avail the benefit. So it will help the insured person to avail the benefit of the policies that he has taken from the insurance company. So basically for the cashless treatment, for the claim processing, so for all the settlements, all these things are played by the all these roles are played by the TPAs by acting as the intermediator between the insurance company and the insured person. Fine. So if you see all the options, then C is going to be the answer to this question. Fine. C is the correct answer to this question. So this is not this is a typo. So not the D, but basically the C option. Fine. Now let us see the question number 21. So which is regarding the difference between the captive agents and independent agents. So mark your answers. The difference between the captive agents and the independent agents in the insurance market. So what is the difference between captive and this and these independent agents? For the question number 21, Yes, as most of you are giving the correct answer. So yes. So the correct answer this question is of this question is going to be the B option. So basically these captive agents, they are tied to a single insurer. Fine, and they can only sell the products that are offered by that single insurer with which they have a tie-up. Whereas if we talk about the independent agent, they have the flexibility to offer policies from multiple type insurers. Fine, so that is the answer. So B is going to be the answer of this question because it represents, so captive represent only one insurer, whereas independent agents, they represent the multiple insurers. Fine, so let us move on to the question number 22. What is the primary purpose of the reinsurance in the insurance industry? What is the primary purpose of reinsurance in the insurance industry? Yes. So for the, so let me see your answers. Most of you are writing B as the answer to this question. Yes. So if we talk about reinsurance, what is reinsurance? Reinsurance is nothing. It is the insurance of, it is the insurance of insurance companies. Fine, if the insurance company has multiple policy holders, what it can do for, in order to reduce its risk, in order to reduce its risk exposure, what it can do, it can share its risk with a certain type of reinsurer, and this reinsurer is another insurance company, a bigger insurance company, and this reinsurance, reinsurance is going to help this insurance company in order to reduce the risk with respect to the different type of claims that are being claimed by the different insured entities. Fine, so that is the job of this reinsurance. So if you see the answer, so the correct answer to this question is going to be the B one, to transfer the risk from one insurer to another, providing financial stability. And so not the C1, sorry, I will correct it when I will upload the PDF. So B is going to be the answer to this question. Which was this question? Question number 22. Fine, so I will change the answer. Now let us move on to the question number 23, which is regarding the role of insurance surveyors in the claim process. So what is, which of the following best describes the role of insurance surveyors in the claim process? Question number 23. Very easy question, very straightforward question. Yes, yes, as most of you are writing, C is going to be the answer to this question. So basically, when we talk about the surveyors, they also act as some kind of, I would say, the intermediators between this insurance company and the insurer. So let us say that there is a person X who has taken an insurance policy with respect to the damage caused by the earthquake, and let us say this earthquake happens. So what this surveyor is going to do? This surveyor is going to go and he is going to assess the loss. He is going to see that what is the loss, that up to which, what is the extent up to which the loss has happened, what is the total amount that is going to incur in order to recover the damage. All these things will be seen by this surveyor who acts as an intermediator. Fine, and that is the idea. So the C is going to be, is the correct answer to this question. Next, the question number 24. In the context of the Indian insurance market, which of the following is true about the capital requirements for the TPAs? So this is regarding the capital requirement for the third party administrators. Question number 24. Which of the following is true? It is asking about the correct option. So let me see your answers for the question number 24. Question number 24. B, C, B, C. Two type of answers we are getting, the option number B and the option number C. Which of the following is true about the capital requirements of third party administrators as per IRDAI? So basically the correct answer to this question is going to be the D1. D is going to be the answer to this question. So as per the mandate by IRDAI, the TPAs must maintain a minimum capital of 4 crore rupees. Why is it so? So that they can ensure their financial stability and they can manage their capacity regarding these claims in an effective manner. So D is going to be the answer to this question, which is the 4 crore rupees. Fine. So I hope it is clear to everyone, which is TPAs must maintain a minimum capital of 4 crore. So not the B. I don't know how it happened. So D is going to be the answer. Let me write it somewhere, the questions that I have to edit. So it is the question number 22, the question number 24. Fine. So these two options are incorrect. I will change it in the PDF. Now let us move on to the next question, which is question number 25. Which of the following best explains the difference between an insurance agent and an insurance broker in terms of legal standing? For the question number 25. Which of the following explains the difference between an insurance agent and an insurance broker in terms of legal standing? So what is the difference? Maybe lengthy statements. So take your time, read peacefully and try to answer this question. Question number 25. So let me see your answers. So for the question number 25, Nilesh is writing C, Mr. Kuwaiti is writing A, Sujit is writing B. So many differences between the answers. What about others? Try to attempt it. Whatever you think is the answer, read it peacefully. I'm giving you the full time because this question is, the statements are lengthy. So take your time and try to answer it. Avinash is writing C. So A, B, C, three type of answers we have got. So basically, when we talk about the difference between the insurance agent and the insurance broker, so they have a lot of commonality. Why they have the commonality? Because both this insurance agent and the insurance broker, they act as an intermediator. They work in the interest in order to serve the benefits of the insurance policies to the insured entities, to the policy holders. So basically, what is the difference? The difference is that when we talk about this insurance agent, these insurance agent, they are bound to a specific insurance company. Fine. So either they are linked to one insurance company or very few insurance company. There is a limitation that is attached to them with respect to the insurance agent. So basically, when we talk about the insurance agent, usually it is said that since they are legally bound with, they have a contractual agreement with either the one company or few insurance company. So that is why we usually say that this insurance agent, whose interest do they serve? They serve the interest of the insurance company. Fine, because they have the limitation, they have agreement with either one insurance company or few insurance companies only. So what they do, they sell the policies of these insurance company only. If you will go to an insurance agent, if you will ask him, what is the best health policy do you have, what is the best health insurance policy do you have, what options he is going to show you? Either he will show you the option of this one company only, or if he has signed agreement with few companies, then he is going to show you options with respect to 3 to 4 companies. He will tell you that these are the only companies that provide the best health insurance policies, and this is the best options you can get in the market. But on the other side of the coin is the broker. When we talk about the broker, that also serves the same purpose. The job is same, but the role, or I mean the way they perform their job is different. When we talk about the brokers, brokers are more independent. Brokers are more independent as compared to the insurers, as compared to the insurance agents. How? Because if you will go to the broker, he has the contractual agreement, or he will sell the policies of multiple insurance company. He has no limitations attached to it. So if you will go to the broker, if you will ask him what is the best health insurance policy do you have, he is going to provide you different diverse type of options as compared to the insurance agent. And that is why we say that brokers works in the interest of whom? It works in the interest of the policy holder. It works in the best of the insured entity, not in the interest of insurer. Why? Because he will show you the best option that is available in the market, because he has no limitation attached to it. Whereas this person, the insurance agent, this person is bound to specific insurance company only, and he will show you the policy of that specific insurance company only. And that is why it usually serves the interest of that specific insurance company only, which is the insurer. I hope the difference is clear to you. So the correct answer to this question is going to be what? It is going to be the A option. Fine. So I hope it is clear to everyone. Now the question number 26. What is the net worth requirement for a composite broker to ensure financial stability and compliance with IRDA regulations? So very factual question, either you know or you do not know. If you do not know, I would not like you to attempt this question. You can write IDK, I don't know. It means that I'm going to skip this question in the examination. Fine, that is also a safe side, because there is a negative marking also. So you have to be beware while attempting a question. So the question number 26. What is the net worth requirement for composite brokers? I hope you know what the composite broker are. Can you tell me in the chat box who are composite brokers? Write it very precisely. Do not over elaborate it. Just write it very precisely. Who are composite brokers? And write the answer also along with it. Answer with respect to this question. Question number 26. So let me read your answers. For the question number 26. Nilesh is saying I don't know. It's fair enough. If you're writing I don't know, it's okay. I would say sometimes it's a good decision to leave the question instead of attempting the wrong question. Fine. Yes, very good. So as John has written, Avinash and Mr. Koeti has written that can do both direct as well as the reinsurance. Fine, they can do direct reinsurance also. So they can participate in the direct policies also, and this kind of, sorry, by reading the option I also forgot it. So basically the composite broker is the one that can sell both life insurance policy and the non-life insurance policy. Fine, so that is the idea. So the point is that what is the net worth requirement for a composite broker? So basically the net worth is rupees 250 lakh. Fine, so D is the answer to this question. I think there is Mr. Kweti and Sujit. They are the only ones, and the Avinash. So 3 to 4 people are there who have given the correct answer. Now the question number 27. Mark your answers. Question number 27. Which of the following roles do the surveys and loss assessors not performs with the claim? For the question number 27. Yes. So as most of you writing, yes, B is the answer to this question. This is something that we have just discussed in the previous question also. The role of surveillance and loss assessor, this is something we have already discussed. So very easy to answer. B is the answer to this question. No, not much explanation required for this one. Fine. The question number 29. Which of the following best defines the role of composite corporate agent? So with respect to composite corporate agent, question number 29, Please mark your answers. Yes, yes. Yes, B is going to be the answer to this question, that the composite broker, so basically they can sell the life, they can sell the non-life insurance also. All such type of insurance can be sold by this composite corporate agent. Very much easy to answer. Fine. Now the question number 30. Which of the following is not a part of the underwriting framework in the insurance industry? Which of the following is not a part of the underwriting framework in the insurance industry? The first is risk assessment, risk calculation, claim processing, and the setting terms and conditions. So mark your answers for the question number 30. Yes, as many of you are writing, so the correct answer to this question is going to be the C1. So basically when we talk about the underwriting, what does it include? Basically when somebody is purchasing an insurance policy from an insurance company, then what he has to do, what this insurance company is going to do, this insurance company is going to assess this person. He is going to assess that person, that how much risky this person is. For example, let us repeat the same example of this smoker. This person who is a smoker, this person has high blood pressure, this person has problem of diabetes. Now this person is what? This person is a risky individual. He can die at any point of time. I mean, this is just a hypothetical example, not a scientific, but just a hypothetical example. Fine. So the thing is that this person is more risky individual. So all this risk assessment will be done under what? It will be done under this process of underwriting. When they will come to know that this person is more risky, he is highly risky, then what they will do, since this highly risky individual, they are going to charge high premium rate from this person. They are going to charge high premium rate from this person. And what is this? This is also a part of underwriting. Fine. And on the basis of this assessment, they are also going to set the terms and conditions of the insurance contract that is going to be signed between the insured entity and the insurer. Fine. All these things are going to be set. So A, B and C are the part of the underwriting. So what is the left one? The claim process. Now why the claim process is not a part of it? Because when the insurance policy is issued to a certain person, claim process is done after the policy is issued. It is not done before the issuance of the policy. But when the underwriting is done before the issuance of policy, whereas claim process is done after the issuance of policy, and that is why it is not a part of this underwriting framework. Fine. So I hope it is clear to you. So now let us move on to the next question, which is the question number 31. Which of the following correctly defines the concept of medical stop loss underwriter in health insurance? Question number 31. Mark your answers. Which of the following correctly defines the concept of medical stop loss underwriter in health insurance? So let me see your answers. Mark your answers, please, everyone. So let me see your answers. Yes, for the question number 31. D, B, I don't know, skip. Okay, so many of you are skipping, rest of you are attempting it, B and D. Okay, what about others? So yes, B is going to be the answer to this question. Fine. So basically what happens in case of medical stop loss insurance is that basically this medical stop loss insurance is designed to protect the employers who self-fund their employees' health plans. For example, let us take the example of any company. Let us take the example of EduTap. Fine. Let us take the example of EduTap. Let us say EduTap is a company what the owner of the EduTap is doing. Whoever the owner of the EduTap is, what he is doing? He is doing the health insurance of the employees of EduTap. So what he is doing? He is doing the health insurance of the employees of EduTap, and this health insurance is self-funded in nature. Fine. So this is what this medical stop health insurance is. Now when we talk about this medical stop health insurance, the underwriter who is associated with the stop loss coverage for this for these type of self-funded plans under the medical stop loss health insurance, these underwriters are what? They are basically the medical stop loss underwriters. Fine. So basically B is going to be the answer to this question. Now the question number 32. So this is the explanation part. You can see this diagram and you can understand what this medical stop loss is. So basically is it designed to protect employers who self-fund their employee health plans. Fine. And the medical stop loss assessor assesses the risk of employers who self-fund their health plans and seek coverage for large unexpected medical claims above a certain threshold. Fine. Now let us move on to the question number 32. What is the key distinction between the proportional reinsurance and non-proportional reinsurance? What is the key difference between the proportional reinsurance and non-proportional reinsurance? So let me see your answers for the question number 32. नहीं current affairs भी है पीयूष. Later on we have current affair questions also. Few current affair questions have also I have added, so we will do that also. Regarding the schemes and pension questions, we are going to see that. Yes, as most of you are writing, so the answer to this question is basically the option number A. Fine. When we talk about the proportional reinsurance, basically it involves the sharing both premium and risk. Fine. But when we talk about non-proportional reinsurance, it covers losses above a specific limit. So basically what happens is that when a reinsurance agreement is signed between an insurance company and the reinsurance company, so if this is a type of proportional reinsurance, what is going to happen? If a certain type of loss happens with respect to a certain type of risk of a policy holders, then this premium, then the loss regarding this premium is going to be shared between the insurance company and the reinsurance company automatically. Fine, in a proportional manner. But when there is non-proportional reinsurance, basically what happens? The losses are not shared automatically. If the loss is above a certain type of threshold, above a certain type of specific limit, then only it will be, the burden will be shared between the reinsurance and the insurance. Fine. So that is the idea. Fine. So this is the difference between the proportional and the non-proportional reinsurance. I hope it is clear to you. Next is regarding the loading, the calculation of loading. So which of the following is not a factor considered in the calculation of loading during the underwriting process? Question number 33. Write your answers. Which of the following is not a factor considered in the calculation of loading during the underwriting process? Yes, very easy to answer. So basically D is the answer to this question. So basically loading is nothing. Loading in insurance is an additional cost that is added to a policy. And why it is added? Basically it is added to cover the higher risk of a customer. Fine. And it is basically mostly it is used in the health insurance and the life insurance product. So if you see all these factors, if you talk about health conditioning, for example, if there is a person and if his health is very bad, fine, if let us say again take the same example, he's a smoker, he he is diabetic, he has high BP. If its health condition is bad, then what is going to be will the loading factor will be added to it? Yes, the loading factor is going to be added, because this is a risky individual. And what is the purpose of the loading? It is, the purpose is to cover the risk of a customer, and if the risk is high, the loading factor is going to be high. Fine. So if the, for example, if the normal premium is 1000 rupees, but if the loading factor will be added, then how much premium has to be paid? The premium that will be paid will be, let us say the loading factor that is calculated is 200 rupees, so the premium that will be paid will be 1200 rupees. Fine. So depends on the type of risk, the different type of parameters. Then the occupation can also be there. For example, if the person works in a mining area, so if he is a more risky type of individual, higher type of risk is there, so the loading is also going to be taken to consideration. Then the age of the person, for example, a person who is 50 years old, he is a very risky individual. I mean, he has a high risk of getting different type of diseases, so that is why the loading factor can be added. But when we talk about the premium payment mode, does not matter what premium payment mode you are choosing. You want to pay premium using the on a monthly basis or on a quarterly basis, whatever basis it is, the loading factor is not going to be attached to it. Fine. I hope it is clear. So D is going to be the answer to this question. Now the next question, sorry, this question got repeated. So the next question, question number 34. In the context of insurance, what does the term under insurance refer to? So let me see your answers. So for the question number 34 regarding the under insurance, Shruti, we are going to talk about it. There is a question. There is a question that will be there in the in the upcoming slides. So we are going to talk about it. Do not worry. So the question number 34. Yes, yes. So the correct answer is basically going to be the option number B. So what is under insurance? So if we talk about the under insurance occur when the sum insured is lower than the actual value of the property. So here's an example that I have added for you. For example, there is a businessman who owns a commercial property valued at rupees 1 crore. But in order to save his premium cost, what this person does, he values it at rupees 60 lakh rupees only, which is 40 lakh less than the actual proper value of the property. And one day, let us say the fire breaks out and that it causes the damage amounted rupees 30 lakh. Now what is going to happen, since this is a case of under insurance, so the compensation that will be provided is going to be lesser compensation that would have been provided to this person in the actual case, if he had taken the actual or the real value of this whole property, which is rupees 1 crore. But what he has done, he has taken the lesser value, which is of 60 lakh rupees. So what is going to be the claim payment? Claim payment is going to be calculated as the sum insured upon the actual value of the property into the damage amount. So 60 lakh upon 1 crore into the damage amount due to fire, which is 30 lakh rupees. So 18 lakh is the amount that is he's going to receive as a part of his compensation. Fine. And this reduced payout is because of what? This reduced payout, which is the 80 lakh rupees, this is due to what? This is because of this under insurance only. I hope it is clear to you, where the claim is settled in a proportional manner. Question number 35. Which of the following best defines the reinstatement value in the property insurance? Reinstatement value in the property insurance. So mark your answers. The reinstatement value in property insurance. Yes, yes. So B is going to be the answer for the question number 35. The amount required to restore the property to its original condition. Fine. If the property get damaged as a part of the property insurance, what is the cost that is going to take in order to restore that property? If the building gets damaged, what is the cost that is going to take in order to restore that building to its original condition? That is nothing but the reinstatement value, which is the answer to this question. So B is the answer to this question. Fine. Now let us move on to the next question, which is the question number 35. Which of the following investment strategies focuses on spreading investment across multiple asset classes to minimize risk? So read the question and answer the question for the question number 35. So it is talking about basically spreading the investment, which is nothing but diversification of investment. Fine. So try to understand it that sense. So what type of theory talks about it? So I'm seeing your answers. Mark your answers, everyone. If you don't know the answer, simply write I don't know. So basically, when we talk about the theory that talks about the spreading of investment, so the correct answer to this question is regarding the modern portfolio theory. When we talk about modern portfolio theory, basically it focuses on creating a diversified form of investment. Fine. And what type of diversified form of investment? For example, in different type of assets. For example, in the bonds, in the stocks, in the cash, different kind of assets, so that the risk can be minimized and the returns can be optimized. So this is the D option. If you talk about the value based pricing, basically it is very much linked to the marketing. The price setting is based on the marketing. If we talk about asset and liability management, it is based on the risk between the asset and liabilities, and it does not talks about the spreading of investment or the diversification of investment. If we talk about competitive pricing, so basically this one talks about the competitors. The price setting is based on the competitors. Fine. And it is not directly related to the investment or the diversification of assets, all such kind of things. So D is going to be the answer to this question. Now the question number 36. Which of the following best describes the concept of deductibles in insurance? So the question number 36. So the question number 36. So when we talk about the deductibles is nothing but it is the amount that an insured person, he has to pay from his own pocket. He has to pay from his own pocket while he is while he is filing a claim for the insurance. For example, let us say the claim that you are filing is 1 lakh rupees, and let us say the deductible that is attached to that certain type of claim is, let us say, 10,000 rupees. So what you have to do, if the claim is of 1 lakh rupees, so out of this whole policy, you will have to pay 10,000 rupees from your own policy, from your own pocket, and rest of the 90,000 rupees will be paid by the insurance company. Why do we have this such type of deductible? So that in order to reduce the number of minor claims that are filed by the policyholder, because what the policyholders do, they keep on coming to the insurance company for the minor claims also, for the small claims also. For example, the claim of 1,000 rupees, for the claim of 500 rupees. Now this increases the task, or I would say this makes the task of the insurance company more tedious. Fine. And in order to reduce that burden, what they do, they have this deductibles. So this is the, for example, let us say the deductible regarding a certain type of claim is 500 rupees, and let us say you go to this insurance company for the claim of rupees 450. Fine. Since the deductibles is 500 rupees, the claim is 450, so this whole 450 rupees, whatever the claim is going to be paid from your pocket only. You cannot go and tell insurance company that please provide this money for me, because they will say that 500 rupees is a deductible amount with respect to the insurance policy, let us say the health insurance policy, and 450 is your medical expense. So this 450 will be paid from your own pocket only, and rest of the 50 rupees will also be paid from your own pocket, because this 450 is less than the deductible. So that is the idea. I hope it is clear to you. So basically B is going to be the answer to this question. Fine. This is the portion of the claim amount that the policyholder must pay before the insurer covers the remaining expenses. Fine. I hope it is clear. Now the question number 37. Which of the following is the distinguishing feature of the file and use system of the insurance products? File and use system of the insurance products. Mark your answers. I can see your answers, so come please to find the details. Question number 37. B or C, A, B, C, three type of answers we are getting for the question number 37. So basically the question number 37, the correct answer is going to be the insurers must self-file. Let me read the options. So insurers can launch a new product without prior approval. Insurance must file product details and receive. Yes, B is going to be the answer to this question. So basically what happens in case of this file and use system is that, so this is a type of mandate. This is something that is an obligation for this insurance company. Suppose there is an insurance company that want to launch a certain type of insurance product. By insurance product we mean some kind of insurance policy. They want to launch the insurance product, this policy in the market. Though, so as per this file and use system, it is mandatory for this insurance company to first show all these policy details to the regulator. Fine. So he will have to show all the policy details regarding the insurance product to the regulator before launching this product into the market. And once and what this regulator will do, this regulator will approve this insurance product, and only when this insurance product will get approved, then only it can be launched in the market. Without that, it cannot be launched in the market as per this file and use system. And this is what the point B says, that the insurers must file product details. So they must file the product details and receive approval from the regulator before selling the product. This is what the file and use system is. So I hope it is clear to everyone. Now the question number 38. Which of the following is distinguishing? Okay, sorry, this slide got repeated. Question number 39. Which of the following is true about the concept of retention limit? The question that the Shruti was asking. Now you will be getting your answer. Fine. So the question number 39. Question number 39. Mark your answers. So very easy and the straightforward question. Question number 39. All of you mark your answers. Yes. As most of you are writing, yes. Yes, D is going to be the answer to this question. Fine. So it is a maximum amount the insurer retains before transferring the excess risk to the reinsurer. So now, Shruti, what was your question? I forgot your question. You were asking the difference between two things. See, the thing about proportional, you were asking the difference between proportional and this one. So the thing is that it is a type of different set of category. So basically it is a different set of category, the proportional and the non-proportional. Proportional means that the risk will be shared between the insurer and the reinsurance company, where non-proportional means the risk will only be shared if it crosses a certain threshold. But when we talk about the retention limit, it is a kind of, it is not something that falls into the category. It talks about from the eyes of the insurer. It is a maximum amount an insurer retains before transferring the excess risk to the insurer. So basically you can say that under this non-proportional system, this classification, you can adjust this risk insurance, but basically this proportional and the non-proportional is the broad classification. Retention limit is nothing. It is a type of term. It is a type of limit. You can say it is a type of threshold. Fine. So that is something, the idea behind that, what the retention limit is. So let us now move on to the question number 40. What is the purpose of the loss of profit policy in profit insurance? In the property insurance. What is the purpose of the loss of profit policy in property insurance? Question number 40. Yes, for the question number 40, the answer, as most of you are writing, so the answer is going to be the B option. So basically what happens is that in this case, for example, there is a person X. This person has a house. For this house, he has done a property insurance. Now let us say his house catches fire. His house catches fire. And now what has happened? His property got damaged. Fine, his property got damaged. Now let me change the example. Fine, let me change the example. Sorry, this is not the house. This is a business. Fine. So this is a business building. This is a commercial property. Now the example is same, that is commercial property got caught fire, it got damaged. Fine. Now let us say the damage happened on, what is the date today? Today the date is 8th of October. So let us say the damage happened on 8th of October. Fine. From the 8th of October till the 8th of November, his shop is not working. Why? Because the shop got damaged, his commercial property got damaged. And for this 1 month, what was happening in the shop? The repairing was happening in the shop, the repairing with respect to these damages. It took 1 month to repair the damages, and the shop got operational from, let us say, the 9th of November. Fine, the 9th of November. But what about this 1 month? What about this 1 month at the time when the shop was not operating, when it was not working? Apart from that, the shop also, the owner of the shop also caused different kind of expenses in order to recover the damages with respect to this shop. So what about this 1 month? This 1 month is nothing but this is what the loss of profit policy is. This is a loss of profit with respect to this whole commercial property. So this loss of profit policy is regarding this loss that is happening in this period of time, in this specified period of time. So the aim of this property is to protect against the loss of sales revenue, whatever type of revenue it is. In this example, our commercial revenue, whatever revenue it is, due to the business interruption. In our example, the interruption is nothing but this fire that was caught in this property, because of which the property was damaged. Fine. So I hope it is clear to you. So B is the answer to this question. Now the question number 41. Which of the following is the primary function of the ECGC, which is the Export Credit Guarantee Corporation of India? Question number 41. So the question number 41. If you don't know, please then also participate. Just write IDK. Fine. Do not wait for my answer. Try to attempt it like as if you were attempting it in the real examination. So write I don't know. So for the question number 41, C. Yes. So those of you are writing C as the answer to this question. Yes, C is the answer. Fine. So what is this ECGC? ECGC is nothing but the Export Credit Guarantee Corporation of India. Now what is this Export Credit Guarantee Corporation of India? For example, let us say there is an exporter. There is an exporter. Fine. This is the exporter of let us take the example of a garment manufacturer. He is a garment manufacturer, so his company manufactures garments, and whatever the garments are manufactured, these garments are exported to a different country. Fine. Let us say Iran. Let us take the example of Iran. Fine. Now we all know that what is happening in Iran. There is a lot of disruption in the Iran because of the Israel and the Iran. What is there? Because of the Israel-Iran, there is a lot of disruption in that country. Now let us say because of the disruption, this person who is the importer in this country, he is not able to make the payment to this person. Fine, it can be because of any reason. So because of some reason he is not able to make the payment to this person. लेकिन कार्गो जा चुका है. The product has been exported. The product has reached its destination. Now this person was supposed to make the payment. Now if this exporter has taken the insurance with the help of this ECGC, which is Export Credit Guarantee Corporation of India, what is going to happen? Let us say the exported product was worth rupees 1 crore rupees. So this is a big number. So let us say it's worth 10 lakh rupees. So what is going to happen? This ECGC is going to pay for this compensation. The ECGC is going to pay the compensation amount, which is the 10 lakh rupee, to this exporter because this importer was not able to make the payment. Fine. So this is the idea regarding the primary role or the primary aim of ECGC. What is the primary aim? To promote the exporters, to promote the exports by providing the credit risk insurance. So what is this? This is the risk insurance. The credit risk insurance, it can be because of the political reasons, it can be because of the commercial reasons, it can be because of the economic reasons also. For example, if there is the devaluation of currency in the importer country, then in that case also ECGC is going to come into action. So that is the idea regarding it, and I hope it is clear to everyone. Question number 42. What is the premium rate for Kharif crops under the Pradhan Mantri Fasal Bima Yojana? A bit of current affair type question, a straightforward question. I hope you know what the Pradhan Mantri Fasal Bima Yojana is. This is the largest insurance scheme in the world. Fine, this is the largest insurance scheme in the world, the crop insurance scheme, and regarding the agriculture. So let me so please tell the premium for the Kharif crops. So what is the premium for the Kharif crops under the Pradhan Mantri Fasal Bima Yojana? Mr. Kuwaiti is writing A, Nilesh is writing C, and others are also, let me see others also, answers also. If you don't know the answer, simply write I don't know. But please participate. Yes. So C is going to be the answer to this question. Fine. So 2% is going to be the answer to this question. Fine. Yes. Good, Nilesh. For Rabi 1.5%, horticulture 5%. Fine. Great. So let us talk about the question number 43. This is a current affair based question. Which foreign insurance company recently acquired a 70% stake in the Kotak General Insurance, marking the first major foreign investment in India's insurance sector in 8 years? So mark your answers. Mark your answers for the question number 43. Yes, Avinash, for the 42 it is C. Now mark your answer for the question number 43. Good. Those of you are writing skip, I don't know, it's great. If you don't know the answer, simply write I don't know, simply write skip. You're free to leave that. I mean, if you are totally unsure about the answer. So this is a current affair based question. So the answer to this question, let me wait for another 10 seconds if somebody wants to mark the answer. So Banavatu Chetan has given the correct answer. A Sujit has also given. So basically the answer to this question is going to be the A1, which is a Zurich insurance company. Now here I have written the explanation. There is nothing much to explain. You can see the article from the newspaper. So Zurich company completes 70% stake buy for rupees 5,560 crore in Kotak General Insurance. Fine. And let me tell you that basically what happened earlier in our insurance sector, the FBI, not FBI, but the FDI limit regarding the insurance sector was FDI limit for the insurance sector, earlier it was 49%, but now it has been increased to 74%. When I say now, basically it refers to the year 2021. In the year 2021, it was increased to 74%. Fine. So the FDI threshold was increased. Now once this threshold was increased, after this is the biggest investment in the insurance sector that is done by the Zurich, this Zurich insurance group. So they have acquired the 70% stake in the Kotak insurance company. Fine. So if it was 49% threshold only, then they would have not been able to take acquire this amount of stake in the Kotak. But since it has been increased to 74% in the year 2021, so after the 2021, this is the biggest such type of investment in the insurance sector that has happened. Fine. So that is why it is important, and I have added it as a part of the current affairs. So this is the first major foreign investment in India's insurance sector in the 8 years. Fine. So now let us move on to the next one. Question number 44. Which life insurance company collected the highest premium in financial year 24 among private players in India? Fine. So mark your answers for the question number 44. 44 B C B C B C B C B C. Fine. So two type of answers we are getting. So the correct answer to this question is the C option. Fine. It is the SBI Life. Fine. So after the SBI Life, we have the HDFC Life also. So C is going to be the answer to this question. Fine. So that is the answer. So which is of 31,000, around 31,000 crore. This is the highest premium that was collected among the private players, which is SBI Life Insurance. Fine. Now let us talk about the question number 45. Chetan, SBI basically it is a joint venture company. Fine, it is between the SBI and the, I think, BNP Paribas. Fine, BNP Paribas is a company. It is a French company, and despite SBI's involvement, SBI Life Insurance is classified as a private life insurance company. Fine, because as it is not wholly owned by the government. That is the reason why it is considered as a private life insurance company. Fine, Chetan. I hope it is clear. Now let us move on to question number 45. So which initiative was taken by the government to ensure uniformity in accident insurance policies across insurers? Very easy question, straightforward. Yes, yes. C, 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 C. Everyone is writing C as the answer to this question. What about others? Please mark your answers for the question number 45. So basically, the correct answer to this question is the B option, which is a Saral Suraksha Bima Yojana. Basically, it provides standard personal accident insurance across insurers to ensure that the customers that are there, they receive uniform coverage and the benefits of the insurance products regarding the accident. Fine. So B is going to be the answer to this question. Now let us talk about the question number 46. Which Indian insurer recent merger was approved by the Competition Commission of India in January 2024? Very easy question. It was there in the news, very much there in the newspapers in the January 2024. Yes, C is going to be the answer to this question, which is Shri Ram Life Insurance Company and Shri Ram LI Holdings Private Limited. Fine. So sorry, there is a correction. So I will edit it in the PPT. C is the answer to this question. Let me write this question number also, because I will have to edit this PPT. Few typos are there. I'm very sorry for that. Fine. So let us move on to the question number 47. Which of the following has contributed most to the growth of non-life insurance premiums in financial year 23? Very easy question. With the common sense also, you can easily answer it. Yes. Okay. What the Nilesh is writing? Nilesh is writing B. Okay, good. What about others? Harshit is writing A. Now he has changed the answers to C. Chetan is writing B. B and C. B and C we are going to write now. So answer to this question is the C. Fine, not the motor insurance but the health insurance. So C regarding the non-life insurance premiums. So C is the answer to this question. So let us see the question number 48. So if you see, with a growth rate of 20.2%, the health insurance contributed significantly. Fine. So the question number 48. Which of the following describes the concept of obligatory cessions as it applies in the Indian insurance industry? Question number 48. Question number 48. Nilesh is writing B. What about others? Mark your answers. Shruti B. Mr. Querty B. Fine, fine. So yes, so B is the answer to this question. So basically what happens in case of this obligatory cession is that, as the name suggests, it is a kind of cession. Cession means to cede, to give something. And what is obligatory? That it is mandatory, which means it is obligatory from the side of the regulatory body, which is IRDAI. So basically obligatory cession is that basically whoever the insurance companies are, these insurance company have to transfer certain amount of risk to the GIC. What is GIC? GIC is the National Reinsurer of India. It is the national reinsurer of our country, and they have to mandatorily transfer a certain percentage of this obligatory cession. Anyone can tell me in the chat box what is the percentage of the obligatory cession they have to transfer? Percentage of obligatory cession they have to transfer to the GIC? Write it in the chat box. Fine. So why this mandatory obligatory cession is there? Because so that the GIC can use the risk money, it can use this money in order to invest it and in order to share the risk of this insurance company. Once it will invest this at different platforms, it is going to get the returns, and it is going to use that money in order to contribute in the growth of the insurance sector in our country. So the government wants our insurance sector to grow. It wants to retain the capital with respect to the insurance within the national boundaries, and this is one of the I would say the guideline by the government regarding the obligatory cession that applies in the Indian insurance industry. Fine. So they have to mandatorily transfer this insurance risk to the GIC, which is the national reinsurer of our country. So let me see the chat box. Has anyone written the number with respect to the obligatory cession? What percentage has to be transferred? Anyone? Nobody knows. So basically it is 4%. Yes, few of you have written. So basically it is 4%. Fine. So the obligatory cession in case of India, it is 4%. Fine. So that is the idea. So 4% of the let us say they have received a premium, total premium regarding motor insurance. There is a company that has received the total insurance regarding the insurance premium. Let us say they have received the premium of 1 crore rupees. So 40% of 1 crore, which is 40 lakh rupees, they have to transfer to GIC. GIC going to use this money, invest this money. There are other details also attached. For example, the redemption amount, the commission that the GIC will provide. We are not entering the details because I cannot discuss everything over here, but this is the overall idea regarding this obligatory sessions. Fine. Now let us talk about the question number 49. This is something अभी हमने बात कर ली इस पे. So A is going to be the answer to this question. Just now I told you, which is 4%. Fine. So the what is the percentage of obligatory sessions for general insurance policies? So basically it is 4%. Fine. Now the question number 45. Sorry, the question number 50. What was the historical significance of the General Insurance Business Act 1972 for the Indian insurance industry? For the Indian insurance industry. Question number 50. What was the significance of the General Insurance Business Nationalization Act 1972 for the Indian insurance industry? Yes, very significant act it is, and all of you have given the correct answer with respect to it. So yes, B is going to be the answer, because because of this act, the contribution of this act is that it nationalized the insurance industry, and this eventually led to the formation of this national reinsurer of our country, which is the GIC. Now there are further details attached to it. Earlier it used to have different subsidiaries also, that it was disconnected with these subsidiaries, and later on it was given the status of the national reinsurer. Fine. So but that is the background knowledge. The role of this the General Insurance Business Act in the nationalization with respect to our insurance industry. Fine. So let us move on to the question number 51. So this is from the pension. Now we are going to see few questions from the pension topic. Fine. So which of the following is not true about the EPF scheme, which is Employees Provident Fund scheme? So for the question number 51. So mark your answers for the question number 51. A, B, D. Three type of answers we are getting. A, B, D. Most of you are writing D and B. Mixed answers we are getting. Fine. So the correct answer to this question for the question number 51 is basically the B option. Fine. Why B option is the answer? Because basically under this EPF scheme, the participation of employees with a monthly salary up to 50,000. If it was up to 50,000, then up to 50,000 it is mandatory. But above 50,000, what is the scenario? Basically it is optional. Fine. It is optional and is subject to the permission of the assistant PF commissioner. Fine. Whoever the PF commissioner is, assistant PF commissioner, it is subject to his permission. Fine. So it is not mandatory for those whose monthly salary is above 15,000, and that is why B is the answer to this question, because the question is asking about which of the following is not true. So the false one is going to be the answer. Let us move on to the question number 52. So try to answer this question. Ram has opted. This is something that we have already discussed, so this is just an application part of that. Try to attempt it. We have discussed about the pension annuity plans, the immediate annuity plan, and the deferred annuity plan. We have seen that, so you can answer this question for the question number 52. Ram has opted for a pension plan where he pays a premium for 15 years. After 15 years, he receives a fixed monthly payout. What type of plan he has chosen? Yes, Mr. Querty. Not true is B. Yes. So what is the correct answer to question number 52? Nilesh is writing C, others are writing B. So yes, B is the answer to this question. So what he has done, he has invested for 15 years in the pension scheme. After 15 years, he is receiving the benefit in the form of monthly annuity payouts. Fine. So that is how it works, and this is what I told you regarding the deferred payment. And regarding the immediate payment, the amount is very much immediate. So when a person is retired, if this was not for 15 years, he has just paid the lump sum amount and then he started receiving the pension, then it would have been the immediate annuity plan. Fine. Now let us move on to the question number 53. Which of the following statements about the public provident fund is incorrect? Which of the following statements about the public provident fund is incorrect? Question number 53. Mr. Quetti, this time remember it is asking about incorrect one. Fine. Last time you missed the keyword, so make sure this is about incorrect. So the minimum tenure for PPF is 15 years. The account can be extended in blocks of 5 years without making additional contributions. The interest rate on PPF is taxable. Early withdrawals are allowed after completing 5 financial years. So which one is incorrect? So basically C is going to be the answer to this question. Fine. So when we talk about the PPF, so basically PPF enjoys the benefit of EEE. What is EEE? EEE basically means exempt. Fine. Exempt with respect to what? Exemption with respect to the taxation. So does not matter if it is a contribution under the PPF or it is the interest that is earned under the the PPF, or it is the maturity amount under the PPF. All these are exempted from the taxation. Fine. So that is why C is going to be the answer to this question, because the C says that the interest earned on PPF is taxable, but we have talked that the contribution, interest and the maturity amount, all these things are tax free, which is under EEE. So that is why C is going to be the answer to this question. Fine. So I hope it is clear to everyone. Now let us move on to the next question, which is basically the question number 54. Which of the following entities is not an intermediary in the NPS architecture? Question number 54. Is not an intermediary in the NPS architecture. $54. Yes. Mark your answers, everyone. Yes, D is going to be the answer to this question. When we talk about this NPS architecture, then the intermediaries involve the pension fund manager and POPSP custodian, but there is no such entities as this pension unified scheme trustee. Fine, there is no such entity. I've just added this option, and so that is it. Fine. So whether it is the pension fund manager, POPSPs, or the custodians, the central record keeping agencies, all these kind of things are a part of the intermediary, but this UPST, it is not a part of that. So question number 55, sorry, the 56. Which of the following statement regarding the Atal Pension Yojana is incorrect? So mark your answers for the question number 56 also. Question number 56. BD, BD, BD. Three type of answers we are getting. What about others? Mark your answers. B. Most of you are writing B as the answer to this question. And yes, B is the answer to this question. Fine. B is the answer, because what happens in case of Atal Pension Yojana is that basically if I compare this APY with NPS, fine. In case of NPS, what happens? In case of NPS, the subscribers can choose their pension fund managers. But in case of APY, what happens? In case of Atal Pension Yojana, what happens? The subscribers cannot choose their pension fund manager. So in this case, the pension fund managers, they are basically chosen by the PFRDA appointed pension fund managers. So they are the ones who basically take the investment decisions, and subscriber cannot choose the pension fund managers in order to manage the investments, unlike the NPS. Fine. So this is the difference between both of them, and I hope it is clear to you. Fine. So for the question number 56, rest of the points are easy. For example, the minimum guaranteed pension amount after the age of 60 based on contributions made by subscriber, it is provided as a part of APY, then it is administered by the pension fund regulatory PFRDA, and the contributions to APY are eligible for tax benefits. We all know that. Fine. So basically it is very easy to eliminate, which is the B one. Fine. It is the incorrect option. You have to choose the incorrect one. Now the question number 57. Which of the following scenario leads to the closure of APY account? Which of the following scenarios lead to the closure of APY account, which is the Atal Pension Yojana account? Fine. So mark your answers for the question number 57. So yes, so what is the answer to the question number 57? Fine. So when we talk about the APY account, so basically if the correct answer to this question is going to be the C option, which is the 24 months. So basically what happens is that if you're not doing your contributions with respect to if you're not paying your contributions with respect to the APY account, so firstly what happens, in the first 6 months the accounts get frozen. Fine. In the first 6 months, the accounts get frozen. What happens after the first 6 months? After the first 6 months, it means after the 12 months, the account get deactivated. And then after the 24 months, what happens? After 24 months, the accounts get closed. So that is the timeline, that is the idea regarding this APY account. Fine. So I hope it is clear to you, which is the C options. Either you know the answer or you don't know the answer in this case. Fine. If you don't know the answer, you can safely skip it, or if you want to attempt, if you know, then C is the answer to this question. So failure to pay contribution for 24 months, that eventually lead to the closure of an APY account. Now let us move on to the question number 58. Which of the following is regulated by both PFRDA and IRDAI? Which of the following is regulated by both PFRDA and IRDAI? Pension fund manager, custodian, annuity service providers, and the Central Record Keeping Agency. So let me see your answers. What answers you are writing? So most of you are writing for the question number 58. Yes. So as most of you are writing the ACB, three type of answers we are getting. Fine. So the correct answer to this question is going to be the C option. Why the C option? Because when we talk about this annuity service provider, so basically this annuity service provider, we all know it deals with the insurance related services. It provides insurance related services, and that is why it is regulated by IRDAI. But it is also under the purview of PFRDA. Why it is under the purview of PFRDA? Because it also provide the NPS subscribers the benefits regarding the annuity. Fine. So it also provide the annuity services to to the NPS subscribers. When do it does it provide? Whenever the NPS subscriber, they will take an exit. So whenever the NPS subscriber will exit, it is going to provide the annuity services, and that is the reason it is under the purview of the PFRDA also. And also, of course, because it provides insurance related services, it is under the purview of IRDI too. So C is going to be the answer to this question. Now let us move on to the question number 60. Which of the following is an incorrect classification of an investment options? Which of the following is an incorrect classification? So one is the investment, then you have the classification, so you have to suggest which one is the incorrect one. Fine, out of all of them. So mark your answers for the question number 60. Very easy to answer, straightforward question. Yes, as the Nilesh has written, and the others are also writing, I think. Yes, so C is going to be the answer to this question. Okay, somebody is writing D also. Piyush is writing D. So basically, C is going to be the answer to this question. Fine. So when we talk about these form of, I would say, what do we say? These financial asset, we know that financial asset are nothing. They are a type of intangible assets. They are a type of intangible assets. For example, it can be the stocks, it can be the bonds, it can be the mutual funds. All this type of assets are intangible and they are financial assets, whereas the real estate is nothing but it is a type of physical asset and not a financial asset. Fine, and that is why C is going to be the answer to this question. Now let us move on to the question number 61. Which of the following is not an example of long-term investment option? Which of the following is not an example of long-term investment option? So we all know what it is. Very easy to answer. An easy question. Yes. So for the 61, the answer is B. So treasury bills are basically, they are it is a type of short term investment option. They are basically the short term government securities, which are basically, usually they are less than 12 months only, and that is the idea regarding treasury bills. It is not a long term investment option, and that is why B is going to be an answer to this question. Question number 62. Which of the following statements is incorrect regarding the Pradhan Mantri Kisan Man Dhan Yojana? Incorrect. Find the incorrect one regarding the Pradhan Mantri Kisan Man Dhan Yojana. Yes. So for the question number 62, as most of you are writing, so the correct answer is what? It is basically the D option. Fine. Why the D option? Because it is not 5,000. Basically, the pension amount under this scheme is 3,000 rupees only. 3,000 per month. Fine. And rest of the portions, we all know that it is voluntary and contribution based pension scheme. Then spouses are eligible, they can join the scheme. Then the contributions are an equal amount. All these things are very much easy to understand, but the wrong option is the D option, which is 3,000 per month. Fine. So let us talk about the next point. Question number 63. So regarding question number 63, which of the following categories of individuals is not eligible to join the Pradhan Mantri Shram Yogi Mandhan Yojana? Not eligible to join. So mark your answers. Shram Yogi Mandhan Yojana. For the question number 63. Yes, yes. So B is going to be the answer to this question, because basically the Shram Mandan Yojana is not for the organized sector, it is for the unorganized sector. Those who are for the organized sector, those who are there in the EPF, NPS, all such type of things. So basically it is for the organized type of sector. Fine. So EPF, NPS, all these schemes are for organized sector. But when we talk about the Pradhan Mantri Shram Yogi Shram Yogi Mandan Yojana, it is for the unorganized sector only. Fine. For the unorganized workers only. Now the question number 64. Under NPS, how many pension funds other than the government sector are registered under PFRDA? And this is a question from PYQ. Fine. This is a question I have taken from the previous year PYQs. So please try to answer it. How many pension funds other than the government sector are registered with PFRDA? Mark your answers. Very much straightforward question. Either you know or you don't know. So the question number 64. Yeah, so basically the correct answer as per the PYQ, as per this question, is 10, but now I think it has been increased to 11, as the Satyam is also saying. So please kindly update it. But the thing is that as per this one, as asked in the PYQ, considering this question, the answer is going to be the E1, which is the 10. Fine. So this was asked in the IFSCA only. Now let us move on to the next question, which is question number 65. What is the maximum investment in equity allowed under the other Atal Pension Yojana guidelines? Maximum percentage equity. This is also from this IFSCA 2023 PYQ. So please try to answer it. How much investment, maximum investment in equity allowed under this Atal Pension Yojana guidelines? So we all know Atal Pension Yojana, which basically focus on the unorganized sector workers, and the maximum investment for equity is what? Mark your answers. Maximum investment for equity is what? A, B, two type of answers we are getting. So basically the correct answer to this question for this PYQ is basically A. Fine. So it is 15%. So A is going to be the answer to this question. So that is it from my side, and I hope the session was helpful for all of you. And if you want other such sessions, you can write it in the comment box. We will keep on bringing such marathons for you that will eventually help you to enhance your preparation. Fine. So that is it for today from my side, and thank you so much, and all the best for your exam. Fine. So all the best for your exam. So I hope it was an effective marathon session for you. Fine. So now I'm ending the stream.